XRP just hit extreme fear levels with the Fear and Greed Index at 12. But here's the twist. The AI models are screaming buy signals. Let's break it down. Here's where we are right now. XRP is trading at $1.03, down about 3.2% in the last 24 hours. Now, I know that doesn't sound great, but you know what I've noticed? Sometimes the best opportunities come when everyone else is running for the exits. We're seeing some serious institutional outflows too, with XRP ETFs bleeding $29.8 million. But here's the thing. There's more to this story. Let me show you why these numbers actually matter. The RSI is sitting at 32.94, which means we're knocking on the door of oversold territory. That's usually when smart money starts paying attention. The price is hugging that lower Bollinger band at $1.06. And, well, when you see that kind of technical setup, it often means we're near a bottom. Now, I'm not going to sugarcoat it, we're still below all the major moving averages, but that's exactly what creates these bounce opportunities. Here's what's really moving the market today. The dollar is flexing its muscles at 101.49, and that's been kryptonite for crypto lately. There's this whole rotation happening where investors are chasing AI tech stocks instead of digital assets. Jeremy Grantham just called Bitcoin unnecessary nonsense and warned about an AI bubble. And honestly, that kind of traditional finance skepticism always creates these temporary sell-offs in crypto. Now, this is interesting on the regulatory front. Senator Cynthia Lummis just set July as the deadline for the Clarity Act passage. That's the first concrete timeline we've gotten. And if this passes, here's what happens. XRP finally gets the regulatory clarity it's been waiting for. Plus, and this is huge, Ripple just officially launched RLUSD in Japan after getting approval from their financial services agency. That's real institutional adoption happening right now. The mood right now is, well, it's pretty terrible, not gonna lie. That Fear and Greed Index at 12 shows extreme fear across the market. But here's something my grandmother taught me about markets. When everyone's panicking, that's often when the best deals appear. Bitcoin hitting new 2026 lows has everyone spooked. But you know what? These extreme fear readings have historically been excellent contrarian indicators. The big players are doing something interesting. We're seeing 484 whale transactions, moving almost 4 trillion XRP tokens. That's massive institutional activity happening behind the scenes. And get this, RLUSD supply on the XRP ledger just hit $801 million, actually surpassing Ethereum for the first time. That tells me institutions are still building positions, even while retail investors are selling. In plain English, we're at the stage where the Elliott Wave analysis shows we're in a C-wave correction that's probably almost done. The Wyckoff method suggests we're in accumulation phase B with about 36% confidence. So basically, we're at one of those critical moments where the market hasn't decided which way to go yet, but all the technical pieces are lining up for a potential reversal. So what does the AI think? This is where it gets really exciting. The AI ensemble models are projecting some pretty aggressive upside. Short term, we're looking at $1.38. That's a 33% jump from here. Medium term, $1.65, which would be a 59% gain. And long term, wait for it, $1.93. That's an 86% rally from current levels. The medium-term prediction has a 98.6% probability rating, which is honestly pretty remarkable confidence from the AI. But here's what could go wrong. Those ETF outflows of $29.8 million show institutions are still heading for the exits. The strong dollar environment isn't going away anytime soon, and if Bitcoin continues falling, it's going to drag everything down with it. Also, even though we have a July deadline for the Clarity Act, there's no guarantee it actually passes. Here's my take. This is a BIY situation, but I do it gradually. The technical oversold conditions plus that crazy AI upside prediction, it's hard to ignore. Here's exactly what I do. Primary entry between $1 and $1.05, that's right around where we are now. If it drops more, secondary entry between 95 cents and $1. Stop loss at 85 cents to protect your downside. Targets? First target $1.38. Second target $1.65. Final target $1.93. The risk reward here is pretty compelling, honestly. That's it for today. Remember, I'm just looking at AI data here, not giving professional advice. But these setups don't come around every day. If this analysis helped you out, smash that subscribe button and give it a like. I'll see you next time, and hopefully we'll be talking about much higher prices.